And we've arrived at episode 5. Finally, our puzzle is starting to come together. We now know the cost of materials, labor, overhead, inventory, and distribution. But now how do we determine if we've made a profit?
If you're going to be in business, you need to know if you're going to make money. It's a proactive thing as much as it is a measurement thing. We've talked about the product costs, labor, materials, and overhead. And then we talked about distribution and marketing. Every company has something of a desired rate of return. How do you go about that whole process?
Using accounting software, which is what makes it a lot easier, making sure that you have all of your expenses and your income and having them categorized correctly. Because if they're not categorized correctly, you could have something that really is an income but in the expense category, and it throws things off.
Sure, I've seen that happen.
And making sure your cost of goods sold are actually listed correctly.
And you want to be able to drill down a bit because you have different cost structures for different things. Is the cost of goods sold a positive relationship with what we have as revenue? You do a budget.
I've actually never had truly a budget. It's unpredictable because of the ebbs and flows of everything.
So what I would ask you is then, okay, so we have a profit and loss statement here. How do you know when you're looking at it that you're hitting your mark?
That's one that I've always struggled with, to know really where I'm supposed to be at. Because I've never taken a class or had a mentor or had someone help explain that part, I've never known.
Do you have an accountant?
I do, but I see them once a year.
Right, I mean, you take your stuff to them and they do your taxes basically.
Yeah.
There are 4 financial statements that people should be aware of and their purposes. One of those is the income statement, which outlines your revenues, your costs, what you have left over. There's the balance sheet. The balance sheet is really where the income statement is continuous. You're continuously working on that. The balance sheet is a snapshot in time. What do you own as a business? All these depreciable assets, all your inventory, all this stuff you own and is an asset. Then there's the liabilities. You have a certain amount of trade payments that you have to make. And then there's whatever's left over between those is your owner's equity section. If you have assets of, to make it easy, 100, and you have liabilities of 25, well, then your owner's equity is 75.
And then there's also accounts receivable.
Right, which is part of your liabilities.
Right. So if you have the wholesale section, it's what are you carrying that someone's going to pay you in 30, 60, 90 days?
Right, and you have to be very careful of those numbers. There are costs that go with that, 30, 60, 90. You get a discount if you pay within 10 days, you pay the net in 30. And I always advise people to make sure that they charge something if you go past 30, whether your accounts receivable, and to watch those people that are going to charge you for going past 30 days because it's basically an interest-free loan. So those are the kind of things that you want to watch on the balance sheet. That leads us into cash flow. There's the cash flow statement that bankers like, which is they talk about how much money you made from your operations. They talk about how much money you borrowed, if you do any of that, and how much money somebody might have invested in you. Bankers like to loan money to people who have money, interestingly enough. But there is also a very distinct need to really be in touch with your cash flow, and I imagine you are.
To pay what comes up this week. Yeah.
Exactly. So,
Oh, yeah.
yeah. And then there's owner's equity. It starts with a beginning balance. You add income to it, and you subtract anything you withdraw, and then you have an ending balance. Well, you want that ending balance, generally speaking, to be higher than the beginning balance. I also say that's the most important financial statement because it's the first statement that an owner goes and looks at. Is my equity growing or not? Let's go back to that special order that you have.
Okay.
Your numbers and your planning show that you're not going to make the mark that you want to make. Talk about where we go from here.
On this special order, I would go back to them and say, hey, this is what it was going to cost to do what you would like in the time frame you want it, and hope that the customer will be willing to have the budget to cover it. And if not, then we don't have the order, or we have a smaller portion or something.
So once again, you have to know who you are. You have to know what it is, what it is your product is and how to price it and how to get it into the right hands of the people that value it the right way.
Yes.
That's excellent.
Thank you so much for watching The Language of Business Season 2. We hope these videos have helped set the stage for you to understand the complexity of pricing your product and earning a profit. They apply whether you're a manufacturer, retailer, or providing a service. Everyone has costs, labor, and overhead. The percentages may change, but you still need to know the principles. Check the Ashland Chamber's website for additional resources.